Market volatility is back. We have a ton to talk about on today's show. Terrible earnings from Disney and Airbnb. Consumer debt hitting all-time highs. We did it, Joe. And we'll be discussing that and much more today on Money Never Sleeps. And this is where I should have the video ready. I can't do this show without Kevin. Thanks for joining us today, everybody. As we get going, hit that like button. If you're new here and you feel so inclined, subscribe to the channel as well. Remember, nothing that House or I say is financial advice, so please do your own research. House, over the weekend, you mentioned that you thought there was going to be a lot of volatility this week. That has rang true. We saw the market bounce a little bit yesterday. Now it's on its way back down. Crypto looks like it wants to take a big fat shit. Meanwhile, on the equity side, we are getting more data that is painting a not so rosy picture for the health of the consumer and in turn the possibility of a recession. So we're going to talk about that today. But first off, how are you doing on this lovely Wednesday, my friend? And how are the markets treating you?
Yeah, I mean, it's kind of been moving the direction that I headed as far as, we saw that massive downfall, quick bounce up, and now looking like we may retest some of these levels. So I'm enjoying myself. Been hands off the past few days, had some success over the weekend. So just kind of watching and waiting to see, after we had that little scare with the Nikkei and then it bounced back up, US stock market, equities, and crypto all reflected that. So honestly, I'm just kind of waiting for Thursday, waiting for the FOMC meeting and waiting to try and get a little bit more insight on what the Fed actually does. Yesterday, I think it was the San Francisco Fed president came out and held a press conference, and it was really funny. She basically said as much as she could say without giving a definitive answer towards any question. Like for anyone who didn't watch, here's a TLDR. So there are two things we could do. Well, actually, there are three, but we're going to focus on two of them. One is we could do absolutely nothing. It's like, no shit, Sherlock. And the second one is we could advise and see what happens. And it's like, what does that mean? Advise what and see what happens, right? It's she just kept going on, and I was like, okay, this is enough. I'm gonna waste more time here and really hear nothing. Now, so yeah, that's kind of where I'm at right now.
Yeah, it was really interesting how the Bank of Japan came out and said we're not going to raise rates during any market volatility. And I'm like, wait, then what was that whole thing about on Sunday and Monday? Like, what are we doing here? I also saw some of the data showing that retail investors sold about $1 billion worth of stocks on Monday, while institutions purchased $14 billion worth of stocks with all the blood on Monday. So it feels like market manipulation to me, but hey, what do I know? I'm not here to send any allegations like that.
I'm not gonna lie. I was a portion of that $1 billion selling figure. I didn't do any sort of massive liquidation, but I was so mad that all the apps and trading sites were offline for the first half of the day that everything that I was like, I've been meaning to sell this, got to trim some fat. I just took the L on it. But I was not. I think honestly, it's the fear, but then also the anger, right? Where like you have to sit there and watch everything bleed, knowing I literally can't access my portfolio because the six biggest retail providing institutions all colluded to turn off their login services conveniently, right when the market was going down.
Very convenient. Not at all. I mean, total, it's a coincidence. Right? It had to be. There's no way that they were working together. They wouldn't do something like that to you, House. Okay.
No, they wouldn't do it for like the sixth time in a row that we've had a major period of volatility, right? It'd be like, you do it every other. You wouldn't do it every time.
Yeah, that would be too obvious. I did use it as an opportunity to buy a little bit of Bitcoin. So, added to the position there. I've started back DCAing Bitcoin. I had stopped for a while, but I have restarted that up again. Just a little nibble every day, just a little bit, and we'll that'll add up over time. And if it keeps going lower, I'll just keep buying more because I guess I'm that kind of a crazy person.
Nice.
Let's talk about some of the other things going on with the market. We had earnings over the last few days. Two of them that have been really, grabbed my attention were Disney and Airbnb. Disney with a miss on theme park revenue, which should not be surprising. We've talked about for a long time how expensive it is to travel with a family, how people are tight for money. This was an additional sign for a slowing economy. Now they did turn a profit on streaming for the first time. So, all 75 Marvel series that they put out a year are finally yielding some positive results. Paying Robert Downey Jr. $100 million to come back and be Dr. Doom. We don't need to go too far down the Marvel rabbit hole because I'll show how big of a nerd I am. But they showed a profit there, but still overall not good for the consumer. And then Airbnb, who is getting fucking waxed today, down about 14.5%, $18.70 a share. Another miss on revenue. Q3 revenue estimates are going to be below. They're expecting Q3 revenue to be below estimates due to slowing demand in the U.S. Who could have seen that coming? I mean, Airbnb, I cannot stand Airbnb.
With Airbnb, I think it's twofold. It's not only at this point, or not even twofold. I think it's the market sentiment surrounding the company is starting to reflect the social sentiment that people have been sharing for 2 to 3 years now, where everything just seems to be getting worse as a consumer and as someone renting on Airbnb, or not necessarily renting, but I guess it is
I hear you
renting.
saying.
And it seems like at least once a week, my For You algorithm spins up here's my Airbnb horror story where I either didn't get the home, or they switched on it last second, or I didn't do anything and they charged me for 10 grand worth of damage type deal after. And it's like, okay, this is there's starting to be too many of these where it's either a copy pasta trend, or Airbnb seriously needs to start taking some sort of action, or providing better guidelines for hosts.
It used to be, almost on par with price of a hotel, but more convenient than a hotel. But now that's gone out the window. With all the fees on I go look for an Airbnb if I'm doing a trip with my wife and son, because it's just nice having a full kitchen with a 2-year-old kid and, having an additional room. You need that. But at the same time, when you look at the prices and then you go to check out on it and all these fucking fees that get thrown on there, it's ridiculous. And then also margins are so thin now for people who own the homes that they skimp on everything because every little bit cuts into their margin on it with all the additional fees from Airbnb. So there'll be times where we'll show up and there will be the minimum amount of literally anything. They will just hold as much back as they can and make you message them to get more of just basic shit that you wouldn't even need to ask for in a hotel. My wife and I stayed in a hotel recently. It was the first time in a while. I was like, oh yeah, this is so much nicer because I don't need to deal with anyone's bullshit to get just the basic amenities that you would have at a hotel. It's so nice. Fuck Airbnb. They can kiss every square inch of my ass. So we also got consumer credit numbers today. Consumer debt, new high, $17.8 trillion, House. Let's get a round of applause for the good old US of A. We're number one, baby. Credit card debt was up $27 billion last quarter. It's at a new all-time high of $1.14 trillion in credit card debt for consumers. And that's with rates on those credit cards near 25%. Kevin and I have been beating this drum forever that these people aren't paying off their credit cards and these rates are going to get stupid high and it's just going to be racking it up. And now we're seeing that problem. We're seeing it reflected in delinquencies on cars, on homes, on credit card bills. We're seeing the housing market start to really show some wear and tear. Listings way up in major states like Texas and Florida. Meanwhile, buyers are still not coming out because the rates are just too damn high. So, it's a really ugly time out there. People are struggling to get by. It fucking sucks. And I don't know what, the Fed's not going to cut at a super fast rate. And that could make the problems worse anyways. They can't turn the money printer back on because that's how we got into this fucking mess. So a lot of people are just kind of sitting there with their thumbs up their ass. What the fuck do I do? My dollar doesn't get as far as it used to. and no one seems to give a flying fuck. So it's pretty nasty out there, House, and I don't know what it's going to take to fix it. Like people much smarter than me are going to need to figure that out.
Yeah, I don't know. I mean, I read on Market Watch this morning that something like 9.1% of credit card balances have transitioned into being delinquent over the past year, which is like, that's freaking shocking, right? That's almost one in 10 people in America. But no, I mean, you're right. Money printer has gone burr for a long time. I'm not sure how much longer they can keep that up. But, if they were really getting smart, they just start investing into this number go up meme, right? It only up only season,
Yeah.
right? Like this
Okay.
this this $5 billion strategic reserve. If they force it up enough, maybe it. No, I'm just joking. No, yeah, it's just like I don't know. They've put it off for so long. Said everything's fine, and at this point, it's we're gonna see hopefully the soft landing that they keep calling for because everyone, it's the.
I don't believe that for a
I mean,
second.
I don't really either. I have a hard time buying it. But at this point, it's like almost a year and a half, 2 years ago now, we were kind of calling for, something to break to where it's extended this long that I think they're just going to keep propping stuff up until it eventually does land soft because they just keep propping up and just adding little steps along the way. Um, However, maybe we get Japan saying, "Hey, we had a brief recovery, but things aren't all that great." I don't know. I'm just struggling at least until post election to see a major long term sustained downfall. Because it seems like, I mean, as much as I want to have like a certain long term outlook, or not necessarily long term, but like 6 months to a year, every day I wake up and I'm just like, well, that's not what I expected. I'm gonna go back to sleep now.
Yeah. I think at some point you can only prop it up with so much nonsense. And when you see the housing market, the wear and tear that's feeling, commercial real estate continuing to be a problem. I know that every time a Fed officials ask about that, they're like, oh, the banks are safe. Everything checks out. They passed our stress test, all of that nonsense. We're going to see some more chaos there, in my opinion. Let's move over to crypto for a little bit. And we saw a good bounce yesterday. Bitcoin got wicked all the way back up to 57,000 before coming back down. It was just under 55 a few minutes ago. It's recovered that number. But we're seeing a lot of weakness with altcoins as well. ETH is essentially a shitcoin at this point, right? Like this thing is absolute garbage. Being outperformed by Solana. I mean, what are we doing here, House? I don't think the ETH ETF is going to save us the way that the Bitcoin ETF did for a while earlier this year. What has gotten your attention in the crypto market?
I mean, honestly, I think the biggest thing that I've been watching is that yes, the ETH ETFs may not have had what every moon boy was preaching for in store, but the institutions haven't stopped buying both ETH and Bitcoin. If you look at all these major custodians of ETFs, namely BlackRock, they have not slowed down, and they just continue to slurp up this dip like they've been waiting for it, right? I mean, if you look at ETH and Bitcoin in the past year, both still looking at pretty good returns. I think Bitcoin's around 30. ETH is somewhere in the mid to high 20s as well. So it's like this is still, sustainable. They've been getting in around 32, 38 as their average. So um honestly, I'm thinking that we may go back and retest these lows, but I don't think crypto is going to go as low as Kevin and I previously thought. Kevin's probably, I'm not sure what his thoughts are, but I think we're at this point where we're really just in a distribution range right now. I think a lot of people got very scared by what happened with the Bank of Japan and carry trade unwinding. Um, so I wouldn't say that we're in a long-term hold or continue to go down, but I think the next couple of weeks are going to be pretty important. I think we chop one way or another, but ultimately by end of the year, January, I think we really just start going up. Um, and touching on Solana, since you did bring up that it's been outpowering ETH, I can't remember who I was listening to or talking with, but But I was hearing something about, is Solana the next ETF? And this guy was saying he doesn't think it is because the ETH ETF, the SEC really didn't want to push through. They made some sort of internal compromises because everyone was kind of demanding it. But as far as a Sol ETF, if you look at futures activity compared to Bitcoin and ETH, the Solana futures market is non-existent, right? So if you want to convince the SEC to start a Sol ETF, will show that there's long-term consistent demand and activity in the futures market. There isn't, right? So the only people that are calling for this are the on-chain degens that are trading meme coins, for the most part, and that's not to say that there isn't institutional investors or aren't institutions that hold Sol and are supportive of it, but as far as going into a mainstream consensus, there really isn't that kind of support that says, yeah, there's going to be a lot of trading volume to justify and warrant a Solana ETF. But yeah, I mean, as far as ETH goes, I think a lot of people would like you to believe that it is a shitcoin right now. But I think what's really happening is it's following Bitcoin. The ETH to Bitcoin ratio has gone tremendously low. Bitcoin dominance is up, but then also, we really haven't seen a whole lot of innovation outside of just new, not even new, but really just DeFi stuff. Like we've seen some reinventions of last cycle's DeFi with little twists on it, right? But there hasn't necessarily been that new product outside of, okay, we have DeFi, we have NFTs. And I'd say like really the only big thing outside of cleaning up some UI UX with like account abstraction and smart wallets is ERC 404, which is kind of the divisible token standard where it can go back and forth between an NFT and a liquid token. But right, it's like what's that catalyst to drive stuff forward other than the ETF? Like there's nothing more you can do with it. There are some new lending borrowing markets, there are some new protocols, but there's not like something like a pump fund, but a pump fund wouldn't make sense on ETH, right? Like it makes a lot of sense on Sol because you can do everything lightning fast with low fees. So it's like, what is that next thing that happens on ETH mainnet or an L2 that really starts driving in long-term sustainable volume?
That is the $1 billion question. All right. Anything on the, any L2s or anything meme coin wise you want to discuss before we wrap it up?
Man, on the meme coin front, it really seems like I don't want to say the church meta is coming, but between the church of the smoking chicken fish, and I think there's
What?
now like the flying spaghetti monster. Well, like here's what I was gonna say is like people are coming up with all of these claims to try and make their vaporware stand out more. And the reason I brought up the Church of the Smoking Chicken Fish is based on their number of holders. They were claiming that they were the fourth largest church in the US, I think, which like I don't know that they'd actually filed the paperwork to become like a virtual church or whatever, but it's really just been funny to me as we're seeing, thousands of meme coins created on Pump Fun every day. And then you get, a few of them that make it to Radium. The rest of them are dead the next day, like 99%. So now those that are making it, they just become more and more outlandish, right? Like I thought we'd seen it all when Harry Potter, Obama, Sonic 10 Inu, ticker Bitcoin came out, right? Like that was like pretty absurd for the time. Now we're getting smoking chicken fish, but it's a church, right? It's
Yeah.
things are really going.
Okay.
I'm just staying locked in. You know me. I know where I'm at.
Oh God. And that is Talking Zoomer with Mr. House. All right. That's going to do it for today. We're going to call it right there on the Church of the Smoking Chicken Fish. Really, really top tier stuff. If you want to know where you can find that, you're going to have to look somewhere else because I ain't got nothing for you there. We will have no show on Friday. Kevin is traveling for work. We'll be back on Monday to discuss everything that's going on. Hopefully the market doesn't totally implode between now and then. So, thank you for being here today, everybody. If you haven't yet, hit that like button, subscribe to the channel, drop a comment about the Church of the Smoking Chicken Fish. And post on social if you feel so inclined. That's going to wrap it up. Have a great rest of your week, everybody. Appreciate you for watching. Stay safe out there, and we'll see you on Monday.